What if I told you the richest people in the world pay less in taxes than you do flipping burgers or driving Uber? This isn't illegal. It's worse. It's completely legal. They own private islands, fly on jets, and hold more money than entire nations. But when tax season rolls around, they vanish into a world of loopholes, offshore havens, and shell corporations. This video exposes how billionaires avoid paying their fair share, not by breaking the law, but by mastering it. We'll reveal the secrets of their tax strategies, the system that enables them, and what this means for you. Stick around, because the real scam, it's hidden in plain sight. To understand the scam, we need to start with the truth. Billionaires rarely earn income the way average people do. You get a paycheck, taxes are deducted before you ever touch the money. Billionaires, their wealth sits in assets, not income. Stocks, real estate, art, cryptocurrency, and businesses. These appreciate in value, but until they sell something, there's no income to tax. Let's take Jeff Bezos as an example. In 2007, the richest man in the world at the time paid zero federal income tax. Zero. Why? He didn't technically earn any income. Instead, he borrowed against his Amazon stock. This trick is called buy, borrow, die. Buy, purchase appreciating assets, stocks, real estate. Borrow, take out massive loans against those assets. Die, pass the wealth to heirs who get a tax break thanks to the step up in basis. So instead of paying capital gains or income taxes, they just borrow. And since loans aren't taxed, they effectively get tax-free money. You and I borrow to survive. They borrow to avoid taxes. Most people pay taxes on income. Billionaires prefer capital gains. Let's compare. Income tax for high earners, up to 37%. Capital gains tax, just 0 to 20%, and sometimes even less. But here's the trick. If you never sell your stock, you never realize a gain. So billionaires let their assets grow and borrow money to fund their lifestyles. Elon Musk did this with Tesla stock, Mark Zuckerberg with Meta, Warren Buffett with Berkshire Hathaway. It's legal, it's brilliant, and it's something only the super rich can do. Real estate isn't just about property, it's a gold mine of tax breaks. Take Donald Trump, a real estate mogul turned president. His tax records showed he often paid $750 in federal income taxes. Why? Because real estate owners can use depreciation, a legal fiction where properties lose value on paper even as their real value increases. They also use 1031 exchanges, swap one property for another without paying tax. Loss harvesting. Declare paper losses to offset actual income. Pass-through entities. Route income through LLCs to reduce liability. It's a game, and they wrote the rule. Now we go global. The Panama Papers and Paradise Papers leaks exposed how billionaires and corporations hide wealth offshore using shell companies and tax havens like the Cayman Islands, Luxembourg, the British Virgin Islands, Switzerland. These entities often don't do anything. They're just names on paper, but they own real assets. Here's how it works. Billionaire creates a shell company offshore. That company owns valuable assets. No income is reported in the US, so no US taxes. Even better, many offshore jurisdictions don't ask questions. They offer secrecy, low taxes, and protection from lawsuits. What if you could donate to charity and still control the money? Enter private foundations. Many billionaires, Gates, Bezos, Zuckerberg, set up charitable foundations. They donate billions and get huge tax deductions. But here's the catch. The foundation can employ their family and friends. The money can be invested. Only a small portion, about 5%, has to be spent yearly. So while these foundations do real work, they also serve as tax shields, PR tools, and long-term wealth vehicles. This might sound like smart strategy, but it comes at a cost. In 2021, ProPublica released tax records showing that the 25 richest Americans paid a true tax rate of just 3.4%. That's lower than a teacher, a nurse, a fast food worker. Meanwhile, the US government is underfunded, public schools crumble, hospitals struggle, roads decay. Why? Because the tax burden shifts to the middle class, while the ultra-rich escape it entirely. And the IRS? It's under-resourced, understaffed, and often audits poor people more than millionaires. In fact, you're more likely to be audited if you claim the earned income tax credit than if you're a billionaire. This isn't just unfair, it's broken. So what's being done? Congress has attempted reforms, closing carried interest loopholes, funding the IRS with $80 billion over 10 years, reversed under pressure. Proposals for a wealth tax from Elizabeth Warren and Bernie Sanders, but each time, billionaires fight back with lobbyists, campaign donations, economic threats, e.g. will leave the country, and they usually win. Even when rules tighten, new loopholes emerge. Wealth managers are constantly innovating. It's a cat and mouse game where the rich always stay one step ahead. Why? Because they don't just play the game. They influence the rulebook. Here's the jaw dropper. In one 5-year span, Jeff Bezos' wealth grew by $99 billion. He paid less than 1% in taxes on that growth. You paid more tax just filling your gas tank and buying groceries. And yet most people still believe the rich work harder or deserve their money. The truth? The system is rigged to protect wealth, not reward effort.
If you made $1 million this year, you'd owe hundreds of thousands in taxes. If you already have 100 million, you could pay almost nothing. That's the difference between income and wealth. And unless the system changes, that gap will only grow.
Let's recap. Billionaires don't avoid taxes by breaking laws. They do it by mastering them. They use capital gains, borrowing, offshore entities, real estate tricks, and foundations to legally sidestep taxation. The system is tilted. The middle class pays the bill while the ultra-rich live virtually tax-free. And while reform is discussed, it's often derailed by the same people who benefit most. It's not just a money problem, it's a democracy problem. Because when wealth buys power and power rewrites the rules, who's really in charge?